So in the last three sessions, what we discussed? We discussed what is the meaning of Oracle Fusion Cloud Financials applications. What does it mean by Oracle Fusion Cloud Financials application we discussed. And we have created, along with that, we discussed about instance. What does it mean by instance and all those points we discussed. And we created a user and we assigned the required roles. Those are application implementation consultant and IT security manager. And by using FSM, functional setup manager, we created implementation project. Please go on mute. Please. Thank you. Okay. So this is what we did in the last three sessions. We discussed about what does it mean by Oracle Fusion Cloud Financial Applications. So how to create the user. The user, whatever we created, that user we call as a implementation user. Okay, we use that user for implementation purpose. So that is the reason we assigned application implementation consultant and the IT security manager roles. And we just gone through FSM, where we can find the offerings, how to enable the offerings, how to create the project. These are the few points we just gone through in the last three sessions. To start with the application, if you want to implement Oracle Fusion financial applications or any applications, you have to understand basic business processes. When you understand the basic business process, you can start with any application so that you can understand what is the responsibility of that department and how the communication takes place within the organization across the departments. These points we can understand so that when we are going to work on the applications also, our job will become very easy. In today's session, we'll discuss about what are the basic business processes we have to understand before we start with the Fusion financial applications. We'll see those. First, we'll talk about the procurement process. So when you talk about procurement process, that means it's all about purchasing and making the payments. If you take any organization, they want to buy something and they want to make the payment, few departments should involve in that process. What are the departments are going to involve in the business process? What would be the each department responsibilities? We'll discuss so that we'll be able to map the same with the specific applications. Okay, let's get into this purchasing process till we make the payment. Take simple example. We received an order from our customer. Okay, say we received an order from our customer. The customer placed order for 100 laptops. Take this case. Okay, 100 laptops, we received order from the customer. When we get the order from the customer, what we have to do is we have to check with inventory department. Whether stock is available within the inventory department or not, we have to verify. Say within the inventory department, we have only say 25 laptops are available. Okay, 25 laptops are available. Only 25 available. Okay, we received order from the customer. Order details are 100 laptops. Our customer need 100 laptops. If 100 laptops are required, if stock is available within the inventory department, we can supply that 100 laptops to our customer. If stock is not available, what we have to do? We have to purchase. Now take the case, we received order from the customer for 100 laptops. And when we check with inventory department, only 25 laptops are available. Now we have to purchase 75 laptops. If there is any requirement, means now 75 laptops we require, that we call as requirement. If there is any requirement, if there is any shortage within the inventory department, the inventory department should take the responsibility of raising the requisition. Okay, they have to raise the requisition. Why they are raising the requisition? To purchase. To purchasing purpose, we have to raise the requisition that should be done by inventory department. For that, inventory department has to create purchase requisition. What is that? Purchase requisition. We call as PR. When inventory department has to create the purchase requisition, if any shortage within the inventory within the warehouse, the inventory department should take the responsibility of raising the purchase requisition. Within this purchase requisition, clearly they specify how many laptops they require. Customer order is for 100, 25 stock is available, and they have to raise the purchase requisition for 75 laptops. Still, if they want to buy more, yes, accordingly they can include the quantity within the purchase requisition. That's fine. Somebody raising the purchase requisition within the inventory department. So before they process it to next step, this need to be approved. Within the inventory department, the purchase requisition should be approved by, say, inventory manager or supervisor. Okay, approvals are required. What is the primary responsibility of inventory department? Stock maintenance. Okay, the inventory responsibility is stock maintenance. They'll maintain the stock. Okay, the stock. Whatever business is dealing, say they are dealing with laptops and desktops and mobiles, etc. So all the items, those stocks we have to maintain within the warehouse. For that we have a department called as inventory department. The inventory department primary responsibility is stock maintenance. If any shortage, the inventory should take the responsibility of purchasing the material. So whenever there is some shortage, inventory department should raise the purchase requisition. We are calling this PR. What information they include within this? What item they required? What is the time frame? In how many days they required? All the details need to be specified in the purchase requisition. That should get approved. Once the purchase requisition is approved by inventory department, the approved purchase requisition they'll pass to purchasing department. Okay, purchasing department. Here other departments also can involve in this process. We'll talk about that. For now, let's take as a purchasing department. So once purchase requisition is approved by inventory department, that information they'll share with the purchasing department. Now the purchasing department will take the responsibility of raising RFQs. They'll request for quotations. They'll create RFQs. RFQ stands for request for quotations. Now we say the purchase requisition, the inventory department is created for 75 laptops. Now what purchasing department will do is they'll create RFQ. RFQ stands for request for quotations. They'll request for the quotations from the different vendors, from different suppliers. They says we need 75 laptops, so and so configuration is required, so and so brand. They give the detailed information. Okay, and we need those 75 laptops maybe in 1 week time. So that's how they'll just give the basic information, they'll request for quotations. When purchasing department is going to request for quotations, what suppliers will do? They'll respond. They'll provide the quotations. That means the purchasing department will receive the quotation. They'll receive quotations from multiple vendors. The purchasing department will receive quotations from multiple vendors. After receiving the quotations, what they have to do, they have to analyze the quotation. Say they are receiving the quotation from the different suppliers. They have to analyze. They have to analyze the quotations saying which supplier is giving best price, which supplier is giving the best terms. Say for example, one supplier is offering each laptop at 25,000 rupees. Okay, one supplier is offering each laptop at 25,000 rupees, and other supplier is offering at 24,000 The third supplier is offering at 23,000 only. Now, from which supplier purchasing department has to buy the laptop? They can look into other terms also. The price wise 23, 24, 25. But what about other terms? The credit. The supplier who is offering laptop at 23,000, the supplier is asking to pay immediately. The supplier, second supplier who is offering each laptop as 24,000, maybe the supplier is giving 1 month payment term. The supplier is saying, I'll give you laptop at 24,000, but you have to pay within 1 month. The supplier who is offering the laptop at 25,000, maybe giving 3 months time to make the payment. Now, organization will take the decision from whom they have to buy. So this we call as a quotation analysis. Who is giving the best price, who is giving the best payment terms, all the points they look into. That process we call as quotation analysis, or you can say quote analysis. Quotation analysis or quote analysis. Okay, quote analysis. What purchasing department is doing, they are requesting for quotations. We need 75 laptops with this so configuration within this time. Please provide quotations. That's how they request multiple suppliers for the quotations. Then they'll receive the quotations from the suppliers. After receiving the quotations, they have to do the analysis. Who is giving the best price and best terms, and other points also they consider. That should be done by purchasing department. They do the quotation analysis. After doing the analysis, they'll choose the best quotations. That may be one or two. Say they requested quotations from the 20 suppliers, but they might have received quotations only from 10 suppliers. When they do the quotation analysis, they may find out two suppliers are offering at best price and best terms. So that's how they have to choose the best quotations. Maybe one quotation, two quotation, they choose. So the next step would be they choose best quotation. Okay, they choose the best quotation. After choosing the best quotation, they have to place the order to that supplier. Okay, for 75 laptops, they have to place the order. They are placing the order to purchase, so that we call as a purchase order. They have to place purchase order. Purchase order, we call as PO short. The short name for purchase order is PO. They place purchase order, they send the purchase order to the supplier with approval. Within the purchasing department, somebody should get approved the purchase order. Okay, somebody should approve that purchase order who has a authority. Maybe supervisor or manager or buyer or someone else who is authorized in the purchasing department to approve. Okay, when we are sending the purchase orders. So the purchasing department has to create the purchase order that should be approved. Approvals are required. Okay, somebody should approve. Once purchase order is approved, the purchase order they'll send to the supplier. They'll send that to supplier. Suppliers will respond to the purchase order by supplying the material. That means our organization will receive the material. Whenever you receive the material, you can create the receipt or you can create the GRN. Okay, GRN means goods receipt note. You have to create the GRN, goods receipt note. That means how much stock we received, how much quantity we received, what item we received, how much quantity we received, that we record in the GRN. And if any damage, okay, or what are the goods we are receiving, if those are not in the good condition, what we have to do? We have to perform the purchase returns. If required, we have to do the purchase returns. So ideally, these all activities can be handled by purchasing department. It totally depends on organization. Okay, there could be separate department called as, okay, here to perform these activities, there could be separate department called as sourcing department, or else the purchasing department itself can involve in these all the activities. Okay, requesting for quotations, receiving quotations, quotation analysis, choosing the best quotation. Ideally, this should be done by sourcing department. Sourcing department. And what ideally purchasing department should do? Okay, placing the purchase orders. That would be the very primary task of the purchasing department. And they can perform the just they record the GR that can be managed by purchasing department or inventory department, and they involve in the purchase returns activity also. So this is how all these activities can be managed by purchasing department, or else there could be separate department called as sourcing department to do all these activities. Okay, all these activities, there could be separate department, or all activities can be managed by single department called as purchasing department. Please go on mute. Please go on mute. Yeah. So this is how the purchasing department can involve in all these activities. Okay, done. There is requirement from customer for 100 laptops. Only 25 stock is available within the inventory department. So inventory department raised purchase requisition for 75 laptops and it got approved. The approved purchase requisition, the inventory department will pass to purchasing department. Then purchasing department will take the responsibility of raising the RFQ, request for quotations. They receive the quotations from the multiple vendors and they do the quote analysis or say quotation analysis, and they can choose the best quotation. Then they'll place order to the supplier. Before placing the order, that should be approved. They'll place the purchase order with approvals. Then our organization will receive the goods that we call as GRN, goods receipt note. If any damage, okay, our goods are not in the good condition, we have to return those items that we call as purchase returns. Okay, these two activities reality takes place within the inventory department, but purchasing department also will involve in all those activities. Done. This is what we have to understand. Okay, we received goods. Once we receive the goods, the purchasing department should pass this GRN information to payables department. So purchasing department is purchased and they recorded how much quantity they received. For that, we have to make the payment. Now payment need to be processed. The payments and all should be processed by payables department. Now what purchasing department will do is they'll pass this GRN information to payables department. Then payables department will create purchase invoice in their books. Purchase invoice. Okay, you can call as purchase invoice or you can call as supplier invoice. How payables department is creating the purchase invoice based on GRN information. What details we can see within the purchase invoice? Who is the supplier? What is the supplier address? How much we have to pay to the supplier? And when we have to pay, nothing but payment terms. When we have to pay to that supplier and to which locations we have to send the payment and how we have to make the payment through check or bank transfer, how exactly we are going to make the payment. All the details, okay, all the details you can find within the purchase invoice. How payables department will create purchase invoice based on the GRN information. Okay, along with the GRN information, payables department will provide purchase order information also. They'll share the purchase order and the GRN information to payables department. So the payables department will create purchase invoice based on the GRN information. As a part of purchase invoice creation, they include the details like supplier name, supplier address, okay, where we have to send the payment to that supplier, how much amount we have to pay, when we have to pay, how we have to pay. All the details will be part of purchase invoice. Say as per purchase invoice, we have to pay within 10 days. Then payables department will take the responsibility of making the payments. So what payables department will do? The payables department will process the payment. The payables department will take the responsibility of making the payment. Now what payables department is doing? They are creating the purchase invoice against the goods whatever we received, and based on the due date. Okay, based on the due date, when we have to make the payment against this invoice, accordingly they'll make the payment. Done. Now, what else payables department is going to do here? The payables department is creating purchase invoice against the goods, and they are making the payment as per due date. Now here let's talk about purchase invoice. For what purposes you can create the purchase invoice? So you may create purchase invoice when you spend some expense. Okay, for expense you can create purchase invoice. So say we spend some expense, we have to make the payment. For that we create purchase invoice. And say we purchase goods. Okay, we purchase goods. We create purchase invoice so that we can make the payment. Or else say we rendered some services. We took some services from an organization. We have to create the purchase invoice to make the payment. So services. And what else? Say we purchased asset. If you are buying the laptop, if you are selling, that is not asset. Say for example, we purchased building, or we purchased land, or we purchased some vehicle, or else we purchased laptop to use in our office. If you buy the laptop to use in our office, that is asset. If you buy the laptop to sell to the customers, that is not asset. Okay, so when you purchase asset, you have to create the purchase invoice to make the payment. So you may create the purchase invoice for expenses, or you may create the purchase invoice for the goods or say inventory items. You may create the purchase invoice for services, or you may create purchase invoice for asset purchases. So with these different reasons, we create the purchase invoice. If the purchase invoice related to expenses, goods and services, just will create and will make the payment. If purchase invoice is related to asset purchase, the asset information need to be managed by asset department. Okay, so since that should be paid by payables department, it will come to payables and will create the purchase invoice and will make the payment. But the payables department should share the asset related purchase invoice information with asset department. Remember that. Okay. If payables department is going to create purchase invoice for expense, goods and services, the payables department is not going to share that information to asset department. When payables department will share purchase invoice to asset department, if the purchase invoice belongs to asset purchase, say they purchased on building, we have to pay to supplier, right? From whom we are buying building, we have to pay. For that, we have to create the purchase invoice and we have to make the payment. For that also, in purchasing department involved, they'll ask for quotations, there will be negotiations. Okay, so that's how purchasing department also will involve in that to procuring the billing process also. But ultimately, the payables department should create the purchase invoice to make the payment. If the purchase invoice is related to asset related purchase, the payables department should share this purchase invoice information with asset department. Then what asset department will do? Based on that asset purchase invoice information, they'll create asset that we call as fixed asset. Okay, when asset department get information from payables department about asset purchase, then asset department will create fixed asset. Okay, that means if it is building, they'll create building. If there is some plant, they'll create as a plant. Whatever the asset our organization is buying, that they'll create in the assets department as a fixed asset. So how they'll get the information? Payables department will pass. Okay. Before asset department, payable department should take the responsibility of making the payment for that asset purchase. So the information will come to payables department. The payables department will pass that information to asset department. So they'll create asset, and if they purchase building and they have to calculate the depreciation. Say the building they purchased at say 10 CR. Maybe after 1 year, you have to depreciate it. The value may be 9 CR, later 8754. Okay, this is how there won't be any appreciation. There will be depreciation. If it is a land, there could be appreciation. Say you purchase land with the 10 CR, next year it may be 13 or 14 CR. There will be appreciation. Apart from land, for almost all the assets, there will be depreciation. You purchase one vehicle, you purchase with the 10 lakhs. Next year, if you want to reevaluate that asset value, maybe 7 lakhs or 8 lakhs. So that's how whatever the assets we are going to have in our organization. So we have to calculate the depreciation. What does it mean? How to calculate that? We'll see when we are dealing with that application. For now, take a point. Okay, depreciation. So payables department will pass asset related purchase invoice information to asset department. Then based on that information, they'll create fixed asset and they'll calculate the depreciation based on the usage and the time. Okay, the purchase invoice information payables department is passing to asset department. They are creating asset, they are calculating depreciation. What about payment? The payables department will pass this payment information to cash department. What is the responsibility of cash department? The primary responsibility of cash department is maintaining the bank accounts, or say cash. They maintain the bank accounts and they perform the bank statement reconciliation, BRS. Bank statement reconciliation. Okay. The bank accounts. The cash department responsibility is maintaining the bank accounts which are owned by organization and they do the bank statement reconciliation. Why payables department has to share payment information to cash department? What cash department will do is, if they want to do the bank statement reconciliation, they get bank statement. As per bank statement says 10 payments are processed in this month. As per their payables books, okay, as per payables department, how many payments are processed? They have to cross check. Okay, as per payables department. As per payables department processed 15 payments. Now they will take the information from payables department and bank. They get the bank statement, they get the payment information from payables department. Who is doing this activity? Cash department. Cash department has to get payments information from payables department and bank statements from bank. Now they'll maintain those two records. Payables records, nothing but payments, bank statement information. As per their payables department, 15 payments are processed. As per bank statement, 10 payments only processed. What could be the reason? They have to find out. It could be very simple reason. What is that? Say payables department issued 15 checks. That is the reason as per payables department books, 15 payments are recorded. As per bank statement, we can see 10 only. Yes, payables department issued 15 checks to the suppliers, but only 10 checks only submitted to bank and those are cleared. Or else 15 checks are submitted by suppliers, remaining 5 may be under the clearing process. Simple. This is how they can identify. Or else, say, as per payables department, they issued only 5 checks, 5 payments. As per payables department books, 5 payments are processed, but bank statement is showing 10 payments are processed. Okay, payment is issued for 10 checks. How come? So there may be some issue. Okay, there may be some issue in the payables department where the accountant might have forgot to record the payments whatever they issued. They might have written some manual check. They might have given. There may be a case where they forgot to enter into their books. So these are all they have to identify, or else the reality they given 5 process 5 payments only. There is some fraud happened in the organization where accountant or somebody issued some checks to unknown parties. That's how there may be some fraud. So to find out all these issues, whether checks are not deposited by suppliers or accountant forgot to enter the payments in the books or there is some fraud happening in the organization, to find out all these issues, the bank statement reconciliation is required. That is the reason cash department takes the responsibility of doing the bank statement reconciliation. Okay, they get the information from the payables department, all the payments details. So cash department get payment information from payables and bank statements information from the bank. They'll take the two records and they'll verify. The verification process only we are calling as a reconciliation. The reconciliation we are doing between the bank statement and the payables department payments information, that we call as a bank statement reconciliation. So this is a key responsibility of cash department. Okay, this is a key responsibility of cash department. So this is how each department is having certain responsibilities. Okay, the inventory department have these responsibilities, primarily stock maintenance and so raising the purchase requisitions and approvals. And when I talk about purchase department, so these are the activities where purchasing department is involving. And payables department, they are creating the purchase invoice and they're processing the payment. Asset department, they are creating assets and they're calculating depreciation. Cash department responsibility is maintaining the bank accounts and performing the bank statement reconciliations. And here there is a communication between the departments, right? Inventory department is communicating with the purchasing department about approved purchase requisitions, and purchasing department is communicating the payables department about these purchase orders and GRNs. They are sharing that information with the, and payables department is communicating with asset department about asset related purchase invoices, and payables department is communicating with the cash department about payment what they processed. Now, so if you want to prepare some reports in the payables department, yes, you can prepare reports which are related to purchase invoice and payments. If you want to prepare some reports related to how many assets we have in our organization, how much depreciation we calculated, you can get that information in the asset department. And cash department, how much cash we have and all, if you want to find out, yes, you can check the bank accounts, you can find out. In the same way, stock. Within the inventory department, how much stock is available, you can go and check. But if you want all the details in one place, okay, what we can do is you can just have separate department who can collect the data from all the departments, so that you may call as a common department. You can have some common department. What they can do is they collect the data from cash department, payables department, asset department, inventory and purchasing, all the department. They collect the data, they'll maintain, and they can prepare the financial reports. Okay, based on those details, they can prepare the financial reports. You can prepare the financial reports. For that, you may have a common department. What is the responsibility of common department? They collect the data from all the departments and they'll maintain the single pool of the data. And based on the data, what sort of reports required, those can be prepared by common department. So simply you can call as a financial reports. So this is how communication takes place. Okay. If you want to buy something, if there is some shortage within the inventory department, this is how department should communicate to execute that activity of procuring and paying. Okay. So inventory department. What inventory department is doing? Purchase in requisitions and approvals. What purchase department is these activities? So we are discussing very high level. Okay. Slowly we'll understand. We'll discuss very detailed level when you are working on the specific department related activities. So what Oracle is doing is, for each department, they are providing one application. With the help of that application, these activities can be performed within that application. So inventory department responsibility is maintaining the stock and creating the purchase requisitions, approving and involving in some other inventory department related activities. To maintain the stock, to create the purchase requisitions, and to handle the approvals, we have an application from Oracle. The application name is Oracle Fusion Inventory. Oracle Fusion Inventory. Nothing but Oracle Fusion Cloud Inventory. Okay. Right. Oracle Fusion Inventory. In short, we call as INV. Okay. So what is the name? Oracle Fusion Inventory. Oracle is providing one application called as Oracle Fusion Inventory. Short name is INV. By using this Oracle Fusion Inventory application, we can maintain the stock for each and every item, whatever the items you are going to maintain. And if any shortage, you can raise the requisitions and you can manage the approvals. Many other inventory related activities also you can deal with this application. This application will help us to deal with the other inventory related activities also. Okay, fine. That's what we have to understand. Now, so reality, these activities should be done by sourcing department. If they have a separate sourcing department, they can have a application called as sourcing application. Okay, if they don't have any sourcing application, sourcing department, the payables department, maybe purchasing department can handle all those activities. But as per our applications, these activities we can do with the sourcing and these activities you can do with the purchasing application. Now let's focus on purchasing only. So just understand as a process flow. So now what are the purchasing department is doing to handle all those activities? We have an application from Oracle, that is Oracle Fusion Purchasing Application. Okay, Oracle Fusion Purchasing. The short name is PO. Okay, the short name is PO. One second. Oracle Fusion Purchasing Application. By using Oracle Fusion Purchasing Application, we can do all these activities. You can do many activities. Okay. So these you can do through sourcing, but here for our understanding, you can take by using Oracle Fusion Purchasing Application, you can do all these activities. What exactly we can do, we'll see in the application. Okay, PO we call, because within the purchasing, the primary activity what we do is creating the purchase orders. So that is the reason we use the short name called as PO for purchasing application. And what payables department is doing, they are recording the purchase invoice and they are processing the payments. To create the purchase orders and to process the payments and to manage payables department other activities, we have an application from Oracle, that is Oracle Fusion Accounts Payable application. Okay, Oracle Fusion Accounts Payable application. So by using Oracle Fusion Accounts Payable application, we can create the purchase invoices and we can process the payment. The short name is AP. Okay, the short name is AP, Accounts Payable. And what payables department is doing, they are passing asset related purchase invoice information to asset department. So what asset department is doing, they are maintaining the assets and they are calculating depreciation. There will be other n number of activities what they do with respect to asset maintenance. To deal with all those activities, we have an application from Oracle, that is Oracle Fusion Fixed Assets. Okay, we have an application from Oracle, that is Oracle, okay, Oracle Fusion Fixed Assets, FA. By using Oracle Fusion Fixed Assets application, FA application, you can create assets and you can calculate depreciation and you can do many other activities which are related to assets. The same way here, the payables department is sharing the payment information with the cash department. What cash department is doing? Primarily, here whatever we discuss, those are primary activities. Once we start working on that, we'll understand many other points. So the payables department is sharing payment information with the cash department. Based on that, cash department is maintaining the bank accounts and they are doing the bank statement reconciliations. To maintain the bank accounts and to perform the bank statement reconciliations, we have an application from Oracle for cash department, that is Oracle Fusion Cash Management. You can call as CM or you can call as CE also. Okay, you can call as CM or CE. Okay, Oracle Fusion Cash Management CM. There is another application called as cost management also. That is the reason we use some alternative name as CE. CE means cash entry. Cash entry means cash management only. So by using Oracle Fusion Cash Management application, you can maintain the bank accounts and you can perform the bank statement reconciliations. Now here we discussed each department, we are recording certain transactions, and to prepare the financial reports, you may have some common department to collect all these departments' data. We discussed that point. Now, to collect and maintain all the departments' data in one place to prepare the financial reports, Oracle is providing one application called as Oracle Fusion General Ledger application. Oracle Fusion General Ledger application. Okay, we call it GL. Sorry. Okay, we have an application from Oracle, that is Oracle Fusion General Ledger. The name is, short name is GL. So the General Ledger application will collect the data from all these applications and it will prepare the financial reports. So this is how we have a different departments, and to support each department we have a applications. For inventory department we have Oracle Fusion Inventory application. For purchasing department we have Oracle Fusion Purchasing application. For payables department we have Oracle Fusion Accounts Payable application. For asset department we have Oracle Fusion Fixed Assets FA application. For cash department we have Oracle Fusion Cash Management application. For common department we have Oracle Fusion General Ledger application. So this is how for each department Oracle is providing the separate application so that the department can use this application to record their activities, what they do in the specific department. So say for example, today we want to buy something. Okay, we have to raise the requisition, we have to get the approvals, RFQ, receiving quotation, quotation analysis, choosing best quotation, placing order with approval GRN, if required purchase returns, purchase invoice payment, sharing asset information to fixed assets, sharing payment information to cash management. Finally, all the data need to be submitted to this common department, that is nothing but General Ledger application. So this is a cycling activity. Say today we purchased, we raised the requisition, we purchased and we paid. Tomorrow again we want to buy mobile. There is some shortage. You have to follow the same process. And today itself you want to buy cars. So you are selling the cars. There is shortage. There is order from the customer. You have to buy. You have to follow the same process. Today you are buying the laptops. You have followed this process. Again tomorrow you are going to buy the same laptops. You need to follow the same process? Not required. You purchase today itself. by tomorrow things won't get changed, price and all. So in that case, you have to raise the purchase request, get approval. Again, you no need to get the quotations. You no need to choose the best quotations and all. Already you have a suppliers who are giving at best price and the best terms for the laptops. You can directly place the order from those order to those suppliers. They will supply. If you are going to buy the laptops, maybe after 1 week or 10 days, maybe you may ask for quotations again. There could be price fluctuation in the market. Otherwise, you don't need to follow asking for quotations all the time. So whenever it is required, you have some approved vendors with whom you are dealing, and you don't need to ask for quotations also. So this is what we have to understand. This is kind of cycling process. Okay. This we call as P2p cycle. Okay. This we call as P2p cycle. P2p cycle. P2p cycle. P2p. P stands for procure. First P stands for procure. The 2 stands for PO2. Okay. Procure to. Other P stands for pay. Procure to pay cycle. So in this process, what we can see, which departments are involving in the procurement process, which department is involving in the payment process. Procure to pay cycle. Okay. P2P stands for procure to pay, that is cycle. It is a repeated activity. It would be keep repeating. Whenever there is some demand, we have to buy. So in the procure to pay cycle, so primarily these 3 departments are involving. You can say departments, nothing but applications. For each department, we have a separate application. So in the procure to pay cycle, these 3 departments are involved primarily. Okay, inventory is involving to raise the requisitions, purchase department is involving to perform all those activities, payables department is involving to create purchase invoice and to make the payment. Other departments are there to just to collect the data for that purpose only. Primarily, they are not involving. But when you say P2P cycle, we have to consider all these departments with respect to product applications. Okay. So what are the different applications or departments are involved in the P2P cycle means this is what you have to list out. Okay. So if you understand this P2P cycle, then tomorrow if you are going to work on accounts payable application, you can have a better understanding. So if you are creating purchase invoice and payables, what is the background? That means there was requisition, POs, goods are received, then we are creating purchase invoice. Okay, if you are going to do the bank statement reconciliation, the Oracle cash management, you can have a better information. From payables, we are taking the payments, how payments are made because purchase invoice was there, how we got purchase invoice, there was GRN, purchase order, requisition, etc. This is the background we can have aware of. So if we are going to create asset in the fixed assets application, we should know how we can create asset, how the process flow works, etc. We should aware. So that is the reason we have to be good enough with this P2P cycle understanding. So what are the departments are involved, what activities each department does, or else say in which application, what activities, what we can do. You should remember all these points. Okay, just remember what are the different applications are involved in the P2P cycle. Okay, just remember the short names also. INV, Oracle Fusion Inventory short name. PO means Oracle Fusion Purchasing. That means purchasing. Which purchasing? Oracle Fusion. AP means accounts payables. Oracle Fusion accounts payables. General ledger, GL. Okay, which general ledger? This is a product of Oracle Fusion. So everywhere that's what you can find. Cash management, CMRC, fixed assets, FA. So this is what we call as a P2P cycle. Any questions on this, please? Any questions from anyone to understand any point related to this P2P cycle?
Hey, hi Lakshman.
Yeah.
I just have one doubt. Under PO, right, purchase order. So once we choose the best quotation, post approval only, like approval from the purchasing manager or somebody, then only we'll be raising the PO, right, Lakshman? Purchase order.
No, not
post approval.
We create the purchase order that will send to the approver. Okay, who has to approve? Maybe supervisor will submit. Once they approve, that PO will send to supplier.
Okay. So
Sometimes
once
we may
PO is
create
created, then it
purchase
will go
order.
for the approval.
Yeah. Sometimes we may create some purchase order. You want to buy something, you are a buyer. You create purchase order, you submit to your manager. Your manager may reject. Then there is no point of placing that order to supplier. Manager rejected, that's all.
Okay.
Yeah. We create and we'll submit. Once it is approved, that we will send to supplier. Yeah.
Okay.
Any other
And
question?
here you've given the example of 100 laptops, what we have received from the customer, right? Due to as we don't have a stock, we have raised for another 75 laptops, right? So in the same example you have given as an asset also, right, Lakshman? Like if we are using for ourselves, like, I mean, if it is using for the company, then it will go to the fixed assets. If
Yeah.
we are
Then we
selling it to
don't place
somebody
in
else
the
also, we'll.
warehouse.
Mhm.
We may not place that in the warehouse. Okay, we will use in the purchasing department, payables department, and other departments. We get when we receive
Oh.
the material, when we receive the laptops, will specify
Mhm.
what is the delivery location. The delivery location may be delivery point, maybe purchasing department or payables department. This is all. Initially, you may take into inventory also if you want. Okay. If
Okay.
you take example of
Okay.
laptops you want to use in our office, yes. In that case, that purchase order we call as asset purchase order. The asset purchase order as well as asset purchase invoice. That information will pass to asset department. True.
Okay. Got
Yeah.
it. Thanks.
Yeah. Any other questions here, please?
Uh, yeah. Hi, Lakshman, Neha here.
Yeah.
I have a couple of questions here. P2P. Since you said that there are different type of different applications which are integrating with each other.
Yes.
Okay. So say I do a purchase requisition and it got approved in the inventory department. That information gets passed to the PO application. So is there any clearing accounts or some control accounts which
We
works in the
have.
back end?
But once we get into the application, those you can understand. Okay, accounts section you will understand once we start with the application. Here, we are trying to understand the process. When you talk about accounts, before accounts, there should be transactions, right? We have to record the transaction. Before that, we have to do the setups. These all are involved. Yes, what you are mentioning, those are there. Okay, clearing
Acha.
accounts, control
Okay.
accounts. Yes, without that, there is no accounting, right? So that is there. That is there. But here our
So,
focus is understanding the process flow. Which department is doing which activity, how the communication takes place among those departments. So for which department, which application we have, what is the exact name, what is the short name. This is our target here. I'll explain all those once we start working on. First, we'll pick on application, we'll discuss and we'll do the setups, we'll record the transaction, we generate the accounting. Okay, we'll create the reports, this and all we have. When we are dealing with those, yes,
okay.
we can discuss those points. Yep.
Thank you so
Hi
much.
Lakshman,
Please.
Harish here. I just have one question. We have approval management engine practice over here in
Yes, we
this
have.
Fusion application.
We have.
Okay,
Yeah.
thanks.
Yeah.
Hi, Lakshman.
Yeah.
I'm Shushan.
Yeah.
I just want to ask from the previous session, you were talking about the FSM up to the offering section.
No, one second.
But then,
If you don't mind, because see, we are in the middle of something. We are discussing now about P2p cycle. If you don't mind, that we can discuss in the end of the session. Yeah.
oh, okay. I just wanted to know if will you discuss the remaining today or do
That
you plan another time?
no. What are you talking about? FSM?
Yeah, the remaining steps you didn't
Yeah,
we
we
didn't
discussed.
discuss the last class.
In the last class we discussed. Hope you received that video. You can go through it. If you have any questions, we can.
Oh, you mean you discussed until the track progress of the project?
Yep. Yes, we have seen that how to create the project. Those we have seen in the last session. I'll
Okay,
walk through
okay.
once again. No issues. Okay. Once we get it
Okay, sure.
application, once again
Okay.
walk through. Again, we'll see how to create a user project. It's a matter of 5 minutes. Right? We'll do that.
Okay, thank you. Yeah, thank you.
Yeah. Right. Any questions on this, please? Okay, so no questions. So this is what we have to understand. The same we'll see in the system also. We'll work on these applications. So here, okay, these are our financials applications. Okay, these are our financial application. We'll discuss once again. Okay, just remember all these points. The same way, here we took example. We received order for 100 laptops, and stock is not available. So we raise the purchase requisition and we purchased and we made the payment. Say we received. Okay, now we purchase the stock. Stock is available. Now we have to supply to customer. How that process will work? That is sales process. If stock is not available, you are purchasing. If stock is available, we can sell to the customers, right? Now let's look into that process and we'll see which departments are involved in that process, how the cycle works. Here we have few departments. Say there is order from the customer for 100 laptops. Same example I'm taking, 100 laptops. Who gets the order? The 100 laptops order sales department should receive. Okay. They'll receive the order. Sales department is responsible to receive the orders. Whenever they receive order from the customers, they'll record the sales order. They'll create the sales order. Okay, sales order. SO. Okay. The sales department say received order for 100 laptops. Now what they have to do is the sales order, whatever they created, whenever they get order from the customer, they record the sales order in their books. Then they'll check with inventory whether stock is available or not. Okay. The first step is receiving order. The second step is they'll check with the inventory department for stock. For stock availability, they'll check. Say stock is not available, then they'll initiate the procurement process. Already we discussed just now. Okay. If stock is not available, this is the process they follow. Now take the case, stock is available. Okay. Stock is available. If not available, they'll purchase so that would be available, they can supply. That's how they can handle. Say they got order from the customer for 100 laptops. When they check for the stock within the inventory department, say they have already 10,000 laptops. Now order for only 100 laptops. Now what inventory department will do is they'll update that information to sales department. Sales department has to give the confirmation to the customer as we are going to supply. The first step is customer is placing the order. If customer is placing the order, it is not like we are going to supply. We have to check the possibilities whether we can supply or not. Customer order is for 100 laptops that we are recording as a sales order. The next step is sales department is checking with inventory department whether stock is available or not. Yes, stock is available. Now sales department will give the confirmation to customer as yes, we are going to supply. Okay, we are going to supply. That they record in their books as a booking the sales order. They'll book the sales order. Booking sales order is nothing but giving the confirmation to customer as yes, we are going to supply 100 laptops as you require. Done. Okay, there is order from the customer. They verified with inventory department, stock is available, so they given the confirmation to the customer and they recorded them in their books as a sales order is booked. Okay, they book the sales order. Now what is the next step? Order received, stock available, they given the confirmation. The next step is they have to move the material from our organization to customer organization. Okay, stock will be available within the inventory. We have to move the material from inventory to customer location. Before we proceed with that point, let's look into how inventory can be managed, how inventory can be structured. Here you could see. Say this complete area is inventory. The inventory area, warehouse can be partition, maybe rooms. You may call as rooms or partition. It can be, you may have some partitions. So in each partition, you may maintain the separate item. For example, in this partition, each partition you call as a sub-inventory. Okay, total area, warehouse we are calling as inventory. And these partitions we are calling as a sub-inventory. Here I just took the example as sub-inventory 1, 2, 3, 4. Why we have sub-inventory 1? Maybe here we maintain the stock of laptop. Here maybe the sub-inventory 2, desktop. And in sub-inventory 3, maybe phones. And here maybe bikes. Say you are dealing with the 4 items. So you have a separate partition to maintain the stock. For that you created 4 sub-inventories in your warehouse. Maybe those are separate rooms or some partitions. However you require, you can do that. So those we are calling as sub-inventories. And there will be some common place. Say I purchase from my supplier. Whenever I purchase, I want to place that items in the sub-inventory 2. Directly I cannot place. The truck will come and it will unload somewhere. From there, we'll move that material to sub-inventory 2. Okay. Or else we are selling to the customer. Stock is available in the sub-inventory 1. Directly I cannot send the stock to customer. The truck should come. We have to load the truck. Then we can ship the material to customer. Okay, that area. Okay. Receiving area or shipping area, whatever we have, that we can call as a staging area. When item will come into our organization, before you place in the right sub-inventory, it will stay there for some time. Or else, when you are going to ship the item to customer, first you will pick the item from the specific sub-inventory and you will place in one area. From there, you will load into the truck. So that item is going to stay there for a certain time, maybe hours or days, that we call as staging area. You take example of home. You enter into the home, that means you enter into the hall. Then you can enter into the bedroom, a reading room, or some other rooms. Again, if you want to move out from the home, from that bedroom, you have to enter into the hall. From hall only, you can take a exit. That means the hall is common area. Hall is common area. In the same way, in the inventory warehouse also, there will be some common area. Whatever the stock is coming in, before it placed in the right sub-inventory, it has to be placed in the common area, then you can place. In the same way, when we are going to send the material to customer, you have to pick and place in the common area, then you can ship to the customer. So these are the points we have to understand. The total area you can understand as a warehouse area, and that is nothing but inventory organization you can call. Staging area means this is a place where we can maintain the stock for temporary purpose. Sub-inventory means where you can store the stock, okay, as per our plan. Now, the point here is order from the customer. Yes, we recorded as a sales order and we verified stock is available. Then we given the confirmation to customer, nothing but we booked the sales order. Now, what inventory has to do? They have to ship the material to customer. Where stock would be available in the sub-inventories. Say stock is, the laptops are available in the sub-inventory 1. Now, the very first step is we have to move the material from sub-inventory to staging, or you can call it shipping area. We have to move the material from sub-inventory to staging area, right? Whenever inventory department will do this activity, the inventory department should inform to sales department also. The reason is customer will keep in touch with the sales department, not in inventory department. Sales department is responsible to inform to the customer about their order. So that is the reason whenever we move the stock from the sub-inventory to staging area, here sales department will record the same activity in their books as a pick release. So pick release, say pick release. Okay, pick release. Pick release is nothing but moving material from sub-inventory to staging, we call as a pick release. That means we are picking and we are placing. We are picking the material from some sub-inventory and we are placing in the staging area for the purpose of shipping. So that we are calling as a pick release. If they record in their books as a pick release, That means material is picked from sub-inventory and placed in staging area or shipping area. Now second step, this is the first step. Moving material from sub-inventory to staging is first step. The second step is from staging we have to move the material to customer location. Whenever inventory department or shipping department will ship the material from our staging to customer location, whenever they initiate that process, sales department will record in their books as a ship confirm. Okay, ship confirm, that's all. So the pick release and ship confirm activities takes place in the warehouse. Those are done by inventory department, but they'll pass that information to sales department because sales department is responsible to answer the customer queries. So this is how it happens. Say we shipped. Okay, first step is we moved from sub-inventory to staging that we recorded as a pick release, and from the shipping area to customer location we send the material that we tracked as a ship confirmation. Customer received items and 2 laptops are damaged. Then customer will return those 2 laptops. In that case, sales department should take the responsibility of dealing with the sales returns. If required, sales returns also should be handled by sales department only. Okay. So this is the responsibility of sales department. These are the primary activities should be performed by sales department. If there is any order from any customer, sales department will record the same in their books as a sales order. In short, you can say SO. And they'll check for the stock availability with the inventory department. If stock is available, they'll book the sales order. Sometimes stock may not be available in the inventory department. Still, they can book the sales order. How? Say customer is asking to supply 100 laptops in 10 days. Now sales department will talk to inventory department. Do we have 100 laptops to supply within 10 days? So inventory department is saying no. Then inventory, they can plan to buy and to sell. Then inventory can talk to purchase department. Is there any possibility we can buy the laptops within 1 week? Because customer is asking within 10. They have to plan less than that time. Is there any possibility we can buy the laptops within week time to supply to the customer? If there is any possibility, even stock is not available here, sales department will give the confirmation to the customer. Okay, if stock is available, they can book the sales order, or else if there is any supply possibility, they can book the sales order. These are the cases. And whenever we move the material from sub-inventory to staging, that we have to record in the sales department as a pick release. Whenever we move the material from our organization to customer organization, or else from our inventory to customer location, that we track in the sales department as a ship confirmation. If any returns from the customer, that we record in our books as a sales returns. Sales returns. So this is how the activities takes place in the sales department. Now what sales department will do is, once they complete that activity, the ship confirmation details they'll share with the receivables department. They'll share with the receivables department. Based on that ship confirmation details, receivables department will create sales invoice in their books. Within the sales invoice, they'll just list out the details like who is the customer, what is the address, what item is sold, how much quantity is sold, okay, what is the price for that item, and when customer has to pay. All the details will be part of sales department. Whenever customer will pay, the receivables department will record that in their books as a receipt. Say against the sales invoice, we sold for 10,000, sales invoice we create for 10,000. Say customer paid 10,000. When receivables department will receive 10,000 from customer against the sales invoice, they'll record receipt. Nothing but cash receipt. Okay, sales invoice for 10,000, and receivables department will follow up the customer. Say customer paid 10,000, they'll create the receipt against the sales invoice. Now receivables department will share the receipt information with the cash department. Why? Cash department has to do the bank statement reconciliation, right? So cash department responsibilities, maintaining the bank accounts. Already we discussed maintaining the bank accounts and performing the bank statement reconciliation. Okay, bank statement reconciliation. Here how they do the bank statement reconciliations. One side they get the bank statement. Okay, other side from receivables they'll get the receipts information. Okay, from receivables they'll get the receipts information. As per receivables department, they have a 7 receipts. 7 receipts means 7 payments they received from the customers. As per bank statement, only 2 payments. How that payments, customer payments will reflect in the bank statement. Whenever receivables department will go and submit those checks in the bank, then only those would get reflected. That too once those are cleared. So as per receivables, 7 receipts. As per bank statement, only 2. They have to find out the reasons with the bank statement reconciliation. If you take this example, it may be like, yes, they received 7 checks from the customers, they recorded in the receivables. Only 2 checks only submitted in the bank for clearing, those are cleared. Or else 7 payments they received, so they recorded as 7 receipts and receivables. 7 checks they submitted in the bank, only 2 got cleared, remaining 5 may be in remittance process. Those may be under clearing process. So this is how they have to find out the reasons. They have to find out the reasons. That this is all done, should be done by cash department. Okay, cash department. The receivables department will pass receipts information to the cash department for the purpose of bank statement reconciliation. Which bank statement reconciliation? A receipts related bank statement reconciliation. In case of here, the payables is sharing payment information to the cash department for payment related bank statement reconciliation. Here, receipts related reconciliation. And finally, all these departments will share the data to common department. The common department will take the responsibility of preparing the financial reports. Okay, the common department will take the responsibility of preparing the financial reports. Okay. So this is what we have to understand about the sales process. When we get order from the customer, we record as sales order. Then we have to book the same. After booking that, when we have to book, if stock is available, book the sales order. Then there will be activity called as pick release. Okay, pick release within the warehouse, like where it's all about moving the material from sub-inventory to staging. Then ship confirmation. Okay, they'll ship the material from our inventory to customer inventory or customer location. If any returns from the customer, will record as sales returns. Then finally, sales department will pass ship confirmation details to receivables department. Okay, the ship confirmation details sales department will pass to receivables department. Based on the ship confirmation information, receivables department will create the sales invoice in their books. Whenever they get the payment from customer, that they'll record as a receipt. Okay, that they record as a receipt, and receivables department will share the receipt information to cash department to perform the bank statement reconciliation, and all these departments will share the data to common department to prepare the financial reports. Here for each department we have a separate application from Oracle. Already we discussed about this inventory department. For inventory department, what application we have from Oracle? Oracle Fusion Inventory, short INV. Okay, so this is a application we have from Oracle Fusion Inventory. Here we can maintain the stock and we can check what sales department is doing. Sales department is involving recording the sales orders, booking the sales orders, tracking pick, release, ship confirmation, sales returns. To do all these activities, we have an application from Oracle, that is Oracle Fusion Order Management. Okay, we have an application from Oracle, that is Oracle Fusion Order Management. Okay, Oracle Fusion Order Management, OM, short name is OM. By using Oracle Fusion Order Management, we can create the sales orders, we can book the sales orders, and we can perform the pick, release, ship confirmation, and we can do the sales returns also. All these activities can be managed by, say, this Oracle Fusion Order Management application. Okay, and we have receivables department. What receivables department is doing? They are just recording the sales invoices, they are creating the receipts. To create the sales invoices and receipts, for receivables department, we have an application from Oracle, that is Oracle Fusion Accounts Receivable application. Okay, the short name is ER. Okay, the short name is ER. By using Oracle Fusion Accounts Receivable application, we can create the sales invoices based on ship confirmation information, and we can create the receipts whenever we get the payment. And cash department, to maintain the bank accounts and to perform the bank statement reconciliations. So for that, we have an application already we discussed, that is Oracle Fusion Cash Management application, CM or CE. These are the short names you can use. Okay. For cash department, we have an application from Oracle, that is Oracle Fusion Cash Management. With that, you can maintain the bank accounts and you can perform the bank statement reconciliations. And to collect all these departments or application data to prepare the financial reports, we have an application from Oracle, that is Oracle Fusion General Ledger, GL. Okay, by using Oracle Fusion General Ledger application, you can collect the data from all these applications and you can prepare the financial reports. So whenever there is order from the customer, okay, the sales department is doing these activities. They are recording, they are checking, they are booking. The pick, release and ship confirmation takes place within the inventory that will be tracked by order management application or sales department. Okay, and they'll pass that information to receivables department. They'll create sales invoice and receipt. Finally, the receipt information they'll share with the cash department. They'll do the bank statement reconciliation. All the data will be shared with the common department. For that, we have application called as General Ledger. So today there is an order from customer. Yes, we have to follow this process. Tomorrow we have another order, or today itself we have one more order. This is a continuous process. We got order, sales order, check, booking, and then pick, release, ship confirmation. If any from customer will record, then this information it will be passed to here, receipt, reconciliation, sending data to General Ledger. This is a complete repeated activity. This is cycling activity. Here the process is starting where? With order. The process is getting initiated with order. We are getting order from the customer and we are stopping this process with the customer payment. Okay, that is the reason this process we call as O2C cycle. This we call as O2C cycle. Okay, we call it as O2C cycle. What does that mean by O2C? O stands for order, 2 stands for TO2, other C stands for cash. So order to cash cycle. Okay, order to cash cycle. That means here the process, the cycle is starting with order. When you get order from the customer, okay, the process starting to cash. When we get the receipt from customer, this cycle ends. Okay, these are the three departments or application primarily involved. This cash management and general ledger just to collect the data from all these. That's all. Okay, cash management just to collect the receipt data. Okay, general ledger application to collect the data from all the applications. This is what we have to understand. Primarily, these three departments or three applications are involved in the O2C cycle, order to cash, order to cash. These activities can be managed here. During this process, inventory help is required to check the stock availability. Finally, receivables will share receipt information with the cash management, all the data to Oracle Fusion General Ledger application. So this is order to cash cycle. Okay. So how the communication is happening? Order management to inventory, inventory order management to receivables, receivables to cash management and all applications to general ledger. So this is all about O2C cycle, what we have to understand. Any questions on this, please? Okay.
Hi Lakshman, I have one question. You said that when we take the items from the sub-inventory to the staging sub-inventory, that is known as pick release. So,
Correct.
is pick release and a transact move order, is there any difference between these two processes?
No, that is transact move orders and all. That's a different story. Okay. The move orders we have a like with the different. You may move the material from this sub inventory to this sub inventory. Okay. Or else you may move the material from one organization to another organization. That's a different. That's totally different. No, that is
Okay, because I read it somewhere, I think that moving the
no,
items
no, no.
from sub-inventory to the staging
These two
sub-inventory
are
is transact move
totally no,
order.
no. I got your point. These two are totally different points. Okay, totally different points. When we move the material from sub inventory to okay staging, that we are calling as quick release. Okay, so move order is a completely separate process. It is not related to this. Okay, moving to staging to supply. That's totally within the organization. Within the organization, whatever the process you do, that is a move order. Okay. So this you understand as a like pick release means moving material from sub inventory to staging we call as pick release. Moving material from staging to customer we call as ship confirmation. Okay, just
Confirm.
giving
Yeah.
the
Okay.
ship confirmation. Ship confirmation means just we are confirming. We confirmed. That means it's already done. That we are recording in our books. Yeah. Fine. Any questions here?
Hi, Lakshman sir.
Yeah.
Yeah, sir, this is Neha here. Sir, I understand in this process that at the time of ship release, information is sent to the accounts receivable for recording the invoices. But what if a customer is buying on a consignment basis? Then also the ship release is being created, correct? So how does the system understands that it is a confirmed sales invoice or a
See,
consignment sale?
consignment and all, they will maintain the separate inventory and the routing, the process will be different. This is standard process. What you are referring, that is a different business scenario. This is standard business process. When it comes to consignment or back-to-back process, okay, drop shipments, these are the business scenarios. Okay, based on that, there will be slight change in this process. But as a O2C cycle, this is what you have to understand. Okay, when you say O2C cycle, this is standard process. Those all are based on the business scenarios. This is by default business process. Yeah.
Okay, so that will be a part of AR module, as in all those business scenarios like sales on return basis or consignment basis or things like that.
No, those all be part of SCM, supply chain management.
Okay.
Okay. In the background, what
So
happened doesn't
impact.
matter. We'll create invoice in receivables. That's it. Okay, sales invoice. How how within the inventory and order management and purchasing application, how the process is handled. Okay, that's totally different from the invoice which we create. The background process could be anything. Simply here we'll create invoice, how much customer has to pay. Whenever receive, we'll record here. That's all.
Okay. So, so for the consignment sales and all, obviously some reports and all will be generated in ER, and then based on some clicking of some button, then the invoices will be
That
generated,
you can
right?
manage, that consignment inventory and all, that is a part of inventory. And in the process, that solution totally falls into SCM, supply chain management. When it comes to finance, the invoice will record, and whenever we get the payment, we'll create receipt and we'll apply. That's all. Okay, if you want to understand that, you may just Google, okay, consignment inventory, just scenario, process, business scenario, how to handle and all. You can find that information. Okay, that you don't do anything in the finance side, but inventory in the supply chain process that you can handle. Yep.
Okay, sir.
If you want to understand when you are working on that, you can raise this point. I'll just light on that. Okay, now just we are trying to understand the basic process of O2C cycle, what we should aware as a O2C cycle. So that is the reason, like, let's not get into that. But anyway, that is not our area. That is not at all our area. That goes to supply chain management section. But anyway, when we start working on the application, when we come to close to the relevant points, you can give in raise this point. I'll explain relevant information. Yeah. Let's see that. Yeah. Any other questions here, please? Okay, this we call as O2C cycle.
Lakshmi, I have.
Yeah.
Hey, sorry to interrupt. So I have one question. So you talked about P2P and O2C, now two different concepts we have done, right?
Yeah.
So if we have inventory available in our stockyard, so directly we will get into O2C, and if we don't have stock, then we will follow this P2P cycle, right? Is my understanding right?
Yeah, whenever you purchase, how you pay, that is a P2P. When your stock is available, how you are selling, that is the O2C. It's correct. Purchasing and paying is P2P. Okay, supplying to the customer is O2C.
Okay.
See, stock may not be available. Still, you will initiate this O2C cycle because you may have a plan of buying and supplying, right?
Supplying.
Yeah. So stock may be available. Still, you want to buy. You may follow the P2P cycle. Say stock is already 10,000. Stock is available. In future, you may need. There could be more demand.
We may foresee more business. Yeah, we may foresee more business.
Exactly. As per
we
your
may
plan.
get into the P2P.
Correct. That is.
Okay.
Yeah.
So I heard some term called put away, Lakshman. I'm sorry. So where does it fall? I mean,
Those are all related to inventory. When we are receiving the material into inventory, there will be stages. In one step, you have to receive, or two steps you have to receive, or three steps you have to receive. Okay, based on that, we receipt routing. I am answering to you only. Okay, receipt routing process.
Okay.
So first, you may receive the material from supplier to your staging. Okay, that we call as receipt. When you move the material from staging to sub-inventory, that we call as the put away receipt. Put away receipt is nothing but moving the received quantity from the staging to inventory, we call as a put away. Yep.
Okay. Okay.
Done. Here what I am doing is, as a part of these two cycles, what we have to understand, what we should aware, I am trying to cover those only. Once we get into the application, what we have to understand with respect to the application, definitely I will focus.
Sure. Thanks, Lakshman. So nutshell idea you're giving us end to end, what is the cycle, how it starts and how it ends. So once we get into the
you should get this clear picture so that once we start, we can understand where we are standing. Right?
Absolutely right. Agreed. Yeah. Thanks.
Any questions on this, please? On O2C cycle? Okay, no questions. Now we'll see these two cycles in one go. Okay, these two cycles. Remember these short names. Okay, inventory, Oracle Fusion Inventory INV, Oracle Fusion Purchasing PO, Oracle Fusion Cash Management CM or CE, Oracle Fusion Accounts Payable CAP, Oracle Fusion General Ledger GL, Oracle Fusion Fixed Assets FA. Here, Oracle Fusion Order Management OM, Oracle Fusion Accounts Receivable CAR, rest same. Now, I took just short names to talk about these two cycles. Here is the slide. They are the two cycles, P2P and O2C cycles. So when you talk about P2P cycle, this is a P2P cycle. Okay. If any shortage, so inventory responsibility is item maintenance. If any shortage, we have to raise the requisition. That is nothing but purchase requisition. I given the short name as a requisition. That has to get approved. Once requisition is approved, the inventory, okay, will pass that information to PO. PO means you can understand purchasing department with respect to product application. Then they'll request for quotations, RFQ, then they'll get the quotations and they do the analysis, they choose the best quotation, then they place the order with approval, then they'll create the GRN. Whenever we receive the material, GRN, goods receipt note, there could be purchase returns. And now the PO will pass the GRN information to AP, accounts payable. Based on that, they'll create the purchase invoice and they'll make the payment. If the payment information they'll send to cash management. Okay, payments to cash management. From AP, asset purchase invoices to FA, fixed assets. Okay, and that's how all the data will send to GL for financial reports. Okay, this is all about P2P cycle. When you talk about O2C cycle, okay, we record the sales order. SO means sales order, already we discussed. When you get order from the customer, we record the sales order, then we'll check for the stock availability with inventory. If stock is available or supply possibilities are there, they'll book the sales order. Then whenever there is a movement of item from sub-inventory to staging, that we call as a pick release. Okay, OEM will take the responsibility of that. Then once we move the material from our organization to customer organization or location, that will be recorded as ship confirmation. And there could be sales returns that also will be handled by order management, or you can call as a department-wise sales department. And then OEM will share ship confirmation details to AR, accounts receivable. Based on that, they'll create the sales invoice. Whenever they get the payment, they'll create the receipt. The AR will share the receipt information to cash management, and all the data will be transferred to general ledger for financial reports. Here you can notice these are the three common departments or common applications which are involved in the P2P and O2C cycles. In two cycles, these are the common applications, and these are the individual applications which are belongs to only P2P. These are the two which are belongs to only O2C. So here, whatever I marked in the yellow color, these are our applications, our financials applications. Okay. These are our financials applications, financials. And here these applications are SCM, supply chain management applications. So when you are going to work on AP, of course, we belongs to finance. When you work on the payables application, when you create purchase invoice, if you don't know the background, okay, you cannot deal with the payables properly. Say you are creating purchase invoice, we have some issue, you got some issue. You are creating purchase invoice based on PO. Based on PO information, you may create purchase invoice, or else based on GRN information, you are creating purchase invoice. When you are creating purchase invoice, you stuck with some issue. If you don't know about the basic information of PO, GRN, etc., you cannot work on payables as required. So that is the reason when we are going to work on this financial application, okay, these SAM applications are closely interacting with the finance application. The PO is interacting with the AP, OM is interacting with the AR. That is the reason the basics of this SAM also we should know. In our classes, I'll cover the basic functionality of this inventory, PO, OM. Being a financial functional consultant for finance applications, whatever the knowledge we require from these SEM also I will cover. Okay, we'll see how to create the requisition, how to create the purchase order, how to create the GRN, okay, how to perform this returns, etc., how to create the sales order, booking, pick, ship confirmation, etc., how this can be done. I'll take you through so that you can understand the complete cycle of P2P, but our primary focus would be on finance only. Here, whatever we have in the SEM, we don't need to learn each and everything, because our course is not SEM course and we are not planning to work as a SEM consultant. Our target is learning financials So that is the reason we'll focus on financials application. We'll go detail level. But when it comes to SEM, it is always good if you can have a basic knowledge on that. That is the reason I'll take you through this SEM application business process, which is connected with our financial applications. Here, say for example, like you have all these applications. You recorded 10 transaction payables, 10 transactions receivables, 10 transactions in the fixed assets, 10, 10, 10, 30. 30 you will send to GL. GL will have a 30. In AP 10, AR 10, FA 10. Here 10, 10, 10, 30, here total 30. Now this GL is holding all the transactions from the different application. That is the reason this is general ledger. Compared to general ledger, compared to this GL, all other applications we call as a sub ledger applications only. Okay, not full ledger, it's sub. Some part of the business process only can be handled. But from all the applications, we'll send the data to GL for financial reports. Say for example, here 10, here 10, 20, 30, 40, 50, 60, 70. From these 7 applications, 10, 10, 10, we may send to GL. Here it will be 70. If you compare GL with FA, here we have only 10. That means it is sub only compared to GL. This is full. This sub application sub. Again, AP also sub. Here we have 10 only, but here we have 70. Here 10, here 70, here 10. That means, so other than GL, all the applications we call as sub-ledger applications. General ledger we call as just general ledger. Other than general ledger, all applications we call as a sub-ledger applications. Okay, these all are applications. These applications, the technical term is module. Okay, module or application both are same. Just simply we call as application, functional friend. Technically speaking, that is nothing but module we call. Okay, module or application both are same. These all are modules, or you can say these all are applications. Okay, so AP, AR, CM, FA, GL, PO, inventory, OM. Okay, we don't call as INV. Short name we use INV, but we call as inventory. Rest of all applications we call with the short names. Mostly we call it the short names. So PO, OM, AP, CM, AR, FA, GL, or else you can call AP as accounts payable. You don't need to include every time Oracle Fusion accounts payable and all, not required. When you are working on Oracle Fusion, so you don't need to include every time. Simply you can say AP accounts payables, AR accounts receivables, CM cash management, FA fixed assets, GL general ledger. So this is how you can say. So this is all about P2P and O2C cycles. So you should understand first to learn about this product. Other side also, these are very, very important when you go for interview. So the very fundamental question they'll ask, could you please explain P2P cycle and O2C cycles? And from your side also, please go through and remember all these points. If you have any chance, like you can give the presentation to somebody. Okay, maybe in your home you can give the presentation, take the feedback from them. So what level you are able to explain about this information. However, I am just sharing the information with you in the same way explain to somebody. So that will become your experience. Okay, that will become your experience when you talk about the product, what we are learning. Okay, so this is all about P2P and O2C cycles. We have to understand. Any questions on this, please? This is our area. Okay, we are going to focus on this. Majorly we'll be focusing on that, and along with that, here whatever we have to understand basics from SEM we'll go through. Okay, our is financials. Yeah, please.
Just now you mentioned that anything besides GL is called the subledger, right?
Yeah, other than GL, all we call as subledgers. Right.
So is the ledger same as primary ledger? Or it's not the same?
Okay, if you get into GL, yes, GL there will be primary ledger.
Oh, okay.
Yeah, this is the GL is the primary. These all are sub.
Okay, so only the GL is called ledger. The rest is everything else. All the other module is called subledger.
Subledgers. So you can say
And module
is the main ledger.
Uh-huh.
These all are subledgers.
Okay. And when you meant module is the same as application, it's exactly the same, right?
Other name for application, the synonym is module. That is a technical term. I can say accounts payable application. Instead of saying accounts payable, I can say accounts payable module.
Oh, okay.
Yeah.
All right. Okay, thanks.
Both are same. You can call as application or you can call as a module.
All right, okay. Thanks.
Yeah. Any other questions here, please? Okay. No questions. So if no questions, what we'll do is from tomorrow we can start with the system. Of course, we have seen how to create user and how to create the implementation project. That's true. But we'll start with a system related work from tomorrow's session based on this discussion. Okay. So P2P and O2C we discussed. Now whatever we discuss, easily you can understand. If I say accounts payable or general ledger, you will easily catch that point what we are referring. So that is
Lakshman, here one question is,
Yeah,
sorry
please.
to interrupt you.
Go ahead.
To create purchase order, we need to define first ourselves as a worker and buyer in the system, right?
Yeah, that we'll see when we are dealing with that. Okay, if you want to know that, still there are few points. You have to create yourself as a, others don't take these points, not required now. You have to create yourself as a procurement agent and you should be a employee. Okay, so these are the 2 points. Okay, they are the 2 points which you have to consider. You should be an employee, first of all. Okay, and second point
Okay,
is
and to
you should
create
you should have a profile of procurement agent, nothing but buyer. Then only you will be able to create purchase orders. I'll explain now. You don't have
okay,
to worry about it. Here, just only you have to understand the process flow. Okay, which departments are involving in which process, what primarily they are doing from that department side. Let's focus on this. I'll
okay,
explain each and everything what you should know. I'll explain. There are a lot of information which we have to discuss. Now, this is just to understand, to make you to understand how the P2P means, like P2P cycle means, which departments are which application, what high level those are involved. We are trying to understand. Okay.
okay. Thanks, Lakshman.
Fine. So let's focus on this. Okay. What are the questions? Once we get into that, when we are working on PO, you will come to know. When you are working on purchase application, what needs to be done to create requisition, what setups are required to create PO, what setups are required. So everything we will discuss and we'll do it. Now, you don't need to focus on that. So let's focus on the cycles. Yeah. Any other questions, please?
Yeah, Lakshman sir, there is one question.
Yeah.
From GL application, can we get reports relating to the SCM application? Since I see that it is also integrating with
Yeah,
GL through some other application.
all data will go to GL. We can get, but we can get the data, but how it is, see, take example, accounts payable, AP. In AP, what we do, we create purchase invoice. The
Correct.
same data will send to GL. When you send the data to GL, will send very limited data. But in AP, you can find complete data. Say, for example, when you create purchase invoice, you will have information like this. What type of work you are creating, who is the supplier, what is supplier address, what is the invoice number, what is the invoice amount, what are the payment, okay, what are the payment method, etc., you can enter. So in AP, you can find all those details. When you send to GL, just you can see how much is the invoice amount and what are the accounts. That's all. This is how you can see very high level. We'll come to no need to think on those points. Please don't mind. We are going to work on it. Okay, no need to guess. You don't need to guess anything. We are going to see reality. You just focus on this. You try to understand what does it mean by P2p and O2C cycles. That's all. Okay, we'll see detail there. Okay, by standing here, if you are trying to understand those, it is difficult. Yeah, please go ahead.
Yeah, hi Lakshman, Santosh here.
Yeah.
Good evening. I'm from a programming background. So how will it be in real time when we go with the financial cloud? What will be the real time working and how it would be? Why? Because I'm from a programming background. So how would be the real time working?
Okay.
So the way.
Yeah, sure. Yeah, I'll answer to your question. Just give me 1 minute. Okay. Any other questions on this, please? If no questions, we're done for today. Okay, we'll connect tomorrow same time. If you have any questions, you can stay back. Any questions?
Sorry. By the way, Lakshman, just now I wanted to ask you. You have already uploaded the recording from the third session, right?
Yeah, we shared third video also.
Is it on the drive?
Not, we didn't create any drive as of now. Just we placed the videos in the YouTube, and that links we are sharing. Maybe in after 1 or 2 classes, we will place all these videos in the Google Drive, and we'll share the drive access so that you can access the videos from the drive. As of now, we uploaded 1, 2, 3 sessions in the YouTube. The links are
Okay.
team members hope shared with you. If not at received, you can keep in touch with them.
Okay, sure. All right. Okay, thank you.
Thanks. Okay, we're done for today. If you have any questions, you can stay back. Okay, no discussions now. Yeah, Santosh, you have some question, right? See. So
yes.
So programming background, like why you want to switch? The first point.
First point is because I think this is having a boom, and I heard that there will not be any coding part in this, and I wanted to be into a different field. That means the accounting background and all. I would like to move for a cloud with a different one, non-programming background.
Yeah,
so I had a 5 6 of experience. So now I wanted to switch to a different mode other than programming. So I have searched in a Google and I got this course as a best choice.
Oh yeah.
And in real time, I have an marketing, the overflow which you are telling, that AR, AP, and assets and all. I have an idea on those concepts.
Okay.
So why? Because we deal with programming for these applications as well. So that is the reason. Thank you.
Yeah, got you. Fine. We'll discuss on this now.